Good morning, one and all, and welcome to this morning's video. So this morning I have four pairs on watch, and those are natural gas, Aussie Kiwi, pound dollar, and euro dollar. I am out of my CAD Swiss trade. I haven't made a video for a little while. I did do a trade recap of my CAD Swiss trade earlier last week, but now that I'm out of the position, I'll give you another recap on that. I'm going to go a little bit faster on that one just because I've already been through it, but I'm out of the trade now, and that banked 1.15%, I believe. So just breaking this down quickly on the high time frames before we move on to what I've got on watch today. So the thesis behind this trade was the fact that we had this, if we just zoom out, we were at a kind of all-time low area, so discounted prices for the buy. Okay, if we just zoom in, you can see that this is the area when we break below a low such as this. This is the area where people often get themselves caught the wrong side of the market, and we just see a complete retracement back into the structure, especially when we had this. Okay, we had this reversal structure here. Okay, so when we have a reversal structure and we have an all-time low, and then we break below it, and then suddenly we get an impulsive move up, this implies that this is just an impulse correction continuation to push higher. But we don't know, that can take a long time, but that's the higher time frame thesis. So if we just zoom in, you can see that we had this 1, 2, 3. Okay, we tap into a hook point here, and when it's a sharp hook point, that implies that there's potentially a lot of liquidity there. We had, what was this? This was Monday. So we didn't have higher time frame candlestick confirmation, but we did have a 4-hour push up. So we did have some kind of confirmation on the 4-hour. It would have been better if we'd had a confirmation candle on the daily, but you can't have everything in trading. And the 4-hour is a very, very weighted time frame. Okay, and when you get the 4-hour momentum come in, there's a strong likelihood that a trade in your forecasted direction will play out. So if we zoom in, you can see now that we have the sharp move down followed by the sharp move up, and then we have the reversal structure, the 1, 2, 3. What do? We break below, catch people the wrong side of the market, and then we push up. So at this point, I'm now looking for longs because we're now back above the sharp move. So I'm on the 1-hour, and I can see that we had the push up there, and you can see price starting to consolidate. Usually that is the banks and the bigger players stacking their orders for the next wave higher. So now I'm filtering this on the 15-minute and the 5-minute chart, actually. If we just unpack the trade. So I dropped down to the 15-minute chart. Okay, and we had, let's get that off. We had this, so we had this little low here. I did have a little ray line plotted on there, but you can see the low of the structure there. We have the little 1, 2, 3. If I just zoom into the 5-minute, it becomes a little bit clearer. We'll just zoom in a touch. So we have that 1, 2, 3 reversal structure leading into a hook point, and we had a little sharp move here. So I had my stop loss below there. The minimum that we go to is 10 pips in any case, but that also protected me below there, below that sharp move there. Okay, just in case price came down to retest that. So now I'm managing this on the 1-hour. Okay, this has all been documented now as well. And the momentum, so the entry candle I used, just to touch on it, was back out on the 15-minute. I used that rejection candle there and put my entry a couple of pips above. The momentum came in pretty much immediately. And this was a simple case of, so when we moved away here, I moved my stop loss to break even. When we moved away, excuse me, when this candle closed, I believe it was, I added on 1 pip. Feel free to watch my last video where I broke this pair down as to why that was. Okay, we come back down, we push back up, we left a bit of a base. So price found liquidity. There was a little bit of a reversal structure here, and price found liquidity from this sharp move, okay, and then pushed up. So I was satisfied that we didn't need to come back down to there, because the fact that we reacted impulsively from this hook point by way of a little reversal structure gave me an indication that this there was the new base. Okay, let's try that again. Right, there we go. So I put my stop loss below here. Once we pushed up again and left this little footprint, I put my stop loss below there, because if that was about midnight, I think, 2 in the on the Tuesday. Up here, I was anticipating a potential, this a consolidation like that, for example, that then taps into that and pushes up. And I said to you in the last video, if we started pushing down, breaking lower, this was likely not the trade that we thought it was. If we started breaking below that, because we don't need to come all the way back down to here again. So it made sense to put my stop loss just below here, give it a little room to retest that. And if we do break below, this is likely not the trade we think it is. And sure enough, I was tagged out there for 1.15, and this wasn't the trade we thought it was. So we don't know what's going to happen next in trading, but we can hazard a guess based on what price is doing and the little structure points that it's leaving. So that is CAD Swiss plus 1.15%. Very happy with that. Wouldn't do anything different. Not always the case. Sometimes there's things you can do differently, but in that case, I'm very happy with that. So natural gas USD. So let's zoom out. So on natural gas USD, if we zoom right out on this one, you have to zoom right out really. So natural gas USD, we've broken above this high, caught people the wrong side of the market and pushed down. And to me, this just looks like I wasn't anticipating a impulse correction continuation to push lower, in the sense of where the impulse is of a similar length of the where the following impulse out of the correction is of a similar length of the initial impulse, because that would take us down to here, and that doesn't really make contextual sense when we're at an all-time low, okay, especially when that would put us into negative equity. Okay, so what this looks more likely to me, this looks more likely like an impulse down, and I was anticipating this a while ago, that this is likely just an impulse down leading into a correction, which happens to be a reversal structure. Okay, you can see that now. Potentially a reversal structure from there leading into an all-time low, which would make sense, because that would be where I would anticipate some movement to the upside. Maybe not all the way back up here, but certainly up to that area, okay, to give us maybe some kind of consolidation like that. Who knows, okay? But what we do have, if we just zoom in, so with that reversal structure in mind, if we just zoom in, we have, what can you see? So we've kind of sold off from nowhere, okay, in the sense of here, we kind of sold off from nowhere. But if this was a reversal structure, so if this was to become a reversal structure, we do tend to sell off from nowhere a lot of the time, especially when where we've sold off from would give us a parallel structure like this. Okay, so if we were to come down from here, we would have a parallel structure. So I'm not as concerned about that as I normally would be, especially when we have a structure here, which is a daily structure. It's visible on the daily. This is a very, very weighted time frame. And what do we have? So we break below this low, the sharp low. Price comes back up, washes out the stop loss orders that were likely above there, because people believe what was previously support becomes resistance once it's broken below. We have a little footprint here, which is more visible on the 4-hour chart, and we tap into that by way of a reversal structure, and look at this daily candlestick confirmation that we've had there of a potential move to the downside, certainly to the base of this structure, and potentially to take out that higher time frame low that I was talking about. Okay, so this is about as clear as it gets with natural gas. So if we just zoom in, there's the little sharp hook point. We don't need to come up to test that one, because that is above here. Okay, so if people are looking at support as resistance now, that's already been taken out. And then this becomes the new footprint, which just happens to be below there. That's what we tap into, and then we move to the downside. So all I'm looking for on this, being mindful of the time and looking at the proportions of what price is doing at the minute, if we just zoom in a touch, you can see that we have, so there's a little inflection point there, which is more visible on the 5-minute. Arguably, we have tapped that now, but we didn't break above it. So potentially what this could be, when we have a little sharp move like that, that's the first thing I thought when I saw this, and then I saw that. A lot of the time, this can act as the move like that, which taps into that by way of the 3. So when we get a little hump like that, that often becomes the start of a reversal structure, which would make sense, tapping into that, and then the retest of this little bit here. Okay, and also that as well. So we'll see what happens. But what I'm going to be looking for from this pair, we might be starting to pull back now. What I'm going to be looking for is, because of the proportions of this and all things considered, the size of the drop, I'm going to be looking for a tight 1 hour continuation. And if that forms, I'll be looking to get short with a 15-minute risk entry within it, or a reduced risk entry on the break. I know the stop loss looks a bit strange, but that's just because the pip range of natural gas is a little bit different, but that is the minimum that we go to, 10 pips. And then I'll be able to manage it down to this low for something in the region of 3%. And then my target in this instance would be, that low there. And then I would mechanically manage this from there to there. I would set a take profit at the 90% area where price often pulls back deeply, even if it's going to continue in the forecasted direction. And that's what I'm going to be looking for from natural gas. Okay, so we've got 3 more pairs to get through, so I better speed up a little bit. So on Aussie Kiwi, we've tapped into this high here. Look at all these near misses. We near miss to it, a near miss to it. That's often implies that that's where the liquidity is, especially when we tap into that by way of this reversal structure there. We break above, catch people the wrong side of the market, and then move to the downside aggressively. And now we have that impulse correction continuation. Bit of a steep pullback, but Aussie Kiwi does stuff like that, so I'm not too concerned about that. And then we have, what do we have here? So we have this structure here. Okay, we break above there, move to the downside. We break below this low. As with natural gas, I'm not too concerned about this because this is above here, whereas you've got this wick here, which is only just slightly above there. So that might be where price pulls back to, especially when we have a near miss to that. Okay. So if we just zoom in a touch, so you can see here, we have a potential 1, 2, 3. These trend lines, I've started using them again because I won't go into why, but it's based on what I've studied in my documentation. But we potentially have a 1, 2, 3 leading it up to that sharp move, which just so happens to be the retest at the back end of that. We potentially have a 1, 2, 3, which lines up with that as well. Okay, so these trend lines are often pointing the way as to where the value is. Okay. So what I'm going to be looking for from this, just speeding up a touch, is I'm going to be looking for a tap into this area of value and then an impulse back down below the area of interest, so there. And then I'll be looking for either a 5-minute continuation, a 5-minute correction, and if that formed, I would look to get short on the break. If we got the 50-minute continuation, these are minimum requirements, I'd look to get short on the break or within the structure, and then I'll be able to manage it down to there for something in the region of 3%. And then my target in this instance would be the low of this structure. And once again, I would use the mechanical management tool and I would measure from there to there. I would set a take profit actually at that low there. I've said before, when we have a sharp move that's just above the 90% area, I set it actually at the sharp move and not at the 90% area, because that is often where price can pull back deeply and not actually at the 90% area. So that is Aussie Kiwi. Nice and simple. Moving on. 2 more to get through. So pound dollar and euro dollar, obviously they're going to look pretty similar, but regardless. So we have, so just looking at this, so you can see price tapped above here, right? And look how it's moved down. It moved down correctively. We would normally expect to see, especially when we had a reversal structure there, we would expect to see an impulsive move down followed by continuation. And look what's happened. We've just consolidated there, suggesting that price did not find enough liquidity there. And why did it not find enough liquidity there? Likely because we have a little sharp move sat just above, okay, where there was a big sell-off from. So when price broke below this low, it left a footprint and there was a huge sell-off afterwards, implying that that's where the liquidity might be. And the other clue is that we near missed to it, okay? So the reason that price likely moved down correctively from here is because it's trying to find liquidity from above price, likely there, before a potential move to the downside or before it consolidates above there to push higher. Okay, so that is the logic behind this. Okay, if we just zoom in, we can see what do we have? We have a reversal structure. This is slightly clearer on the 4-minute chart, the 4-hour chart rather. We have a 1, 2, 3 with a middle section that taps into, you'll see this, there's a 4-hour area of liquidity here and also retests the back end of this as well. So that also adds fuel to the theory that we're pushing higher to take out this high, just to touch on it as well, this high near miss too. Okay, so if we just zoom in a touch, there's your, whoops, there we go. Just zoom in. So there's your reversal structure. I think there's a point there on the, I'm not too bothered about the first point. All I'm bothered about is this overall move. Okay, the overall just structure of it. There's the little low that we tapped into, that area of consolidation, which caused, there was enough liquidity there to cause price to break above there. So there must be quite a bit there. Okay, we tap into that, and then we're trading above here now. And if you look, price come down, and it narrowly missed the retest of the back end of this. So I wouldn't be surprised if we come back down. This may take a day or two, but what I'll be looking for, especially as we just analyze this, we also have a near miss to here. So we have a near miss to here, and then a near miss to here. And you can see that we got some kind of reaction from this high. So it's likely that price will need to tap into the areas that it's near miss to before continuing to the upside. So what I'll be looking for in this instance is the following. I'll be looking for one of this might end up being a 4-hour flag by the time it's finished, if it does what I'm anticipating. But what I'll be looking for is a 3-touch 1-hour continuation, or a 2-touch 1-hour continuation with a 3-touch structural approach. So where you get the low like that, and then you have a 3-touch. They're so close at this point that it's likely one and the same. But if we've got a 3-touch there with well, that's effectively a 2-touch with a 3-touch structural approach. But if we've got something like that, then I would look to get long, and then I'll be able to manage it to the high of the structure for something in the region of 3.5%. And then in this instance, my target would be that high there. And then once again, I do apologize if you can hear my stomach rumbling. And then I would measure from the range, so from there to there, and I would set my take profit. Look at that. These are mathematical things we're looking at, folks, and it just happens to line up with that sharp move. So these things are not random. There's this kind of human psychology and psychological science behind all of this. So I would set my take profit at that wick there, and that would give us something in the region of 9.5–10%. Okay. So that is pound dollar, and then with 3 minutes, just under 3 minutes to go, let's go through. Let's just take that guy off the chart a minute. Right, so euro dollar. So euro dollar, pretty much a similar deal. So we had what we've done here is you can see that we were near missing to that high. Price tried to sell off, but it didn't find enough liquidity to sell off from there. Likely because we had that sat above, and because we built up too much volume here. So when we have a sharp move down and we have all this volume, this becomes an M-style pattern a lot of the time, where we just break to the upside. Okay, and you can see here what we've done. Okay, we had this move here, we come down, we retest the back end of all of this, move to the upside, and then we have the same thing. We have that impulse correction, potential continuation. How did price respond from here? It moved down correctively by way of a reversal structure, suggesting that there was not enough liquidity here to send it to the downside, likely because we have that sat above. Okay, so this might be an impulse correction continuation to tap us into that area. So if we just zoom down very quickly, it's going to look very much the same as pound dollar, or what I'm looking for. You can see the reversal structure there. We have the 1, 2, 3. One of the reasons this is lower down on the list is because this hasn't really tapped into anything on the left. Okay, whereas pound dollar did. And in this instance, if we were to come back down to take out this little low here, which these lows have near missed too, we're not actually retesting the back end of anything, whereas with pound dollar we actually were. So that's another reason why this is lower down on the list. But again, it's still a very clean setup. So what I'll be looking for is the same thing again. Okay, I'll be looking for price to come down and tap into this area, which these lows have near missed too. We may get that. This may take a little bit longer. And once again, I'll be able to manage it to the high for something in the region 2.5–3%. And my target in this instance would be here. Okay, for something in the region of 8%. And once again, I would use the mechanical management tool to measure from the range. So there to there, I would set a take profit there, and I would trail my stop loss accordingly. So that's what I'm going to be looking for today, folks. I hope this has been clear to you and provided you with some value. I hope you've enjoyed the thought process. I've tried to squeeze in as much as I can in 20 minutes, which is no mean feat, I can tell you that much. But I hope you've enjoyed this. Have a great day, and I'll see you again in the next video. And of course, if I place another trade, whether it be a win, loss, or a break even, I will bring you a trade recap on that trade, just as I have with CAD Swiss. Have a great rest of your day. See you again soon.